So this is what you're gonna watch. So now if we will go with 3 versus 1, we can count 1, 2, 3, 4. Extended fifth wave is typical. If you have a shorter one, you have an extended fifth wave. Okay. 1, 2, 3 versus 1 right at 200%. Retracement down to 50%, 50% have an extended fifth wave that goes to 3 versus 1 to 6, 1.8. This one right there is calling for a fourth wave now. Okay. So we'll see what happens here. It could push a little bit more, but we just have to watch this 160 to 180, this zone right there to see where the price starting to set back. Okay, either just gonna wait for earnings. That will be the earning dip right there in a fourth wave. You know, I mean, the other if the price will accelerate, meaning that if we got a strong push to the upside, we just gotta have to move this one here, and then when done, we can just open more upside. So I mean, if it when it happens, then we're gonna find out what happens. But in the meantime, you just have to watch um this this zone right there. Okay. What else I was working on? GS, Goldman Sachs. I mean, look at all these stocks from the peak to trough. All three, the this April, March sell-off, it's all three-wave declines. From here, there's your April low right there. Same thing. 1, 2, 3 versus 1, 261.8. You see what price is doing here, and they just reported earnings this week. See, this is a very strong fib. I know that. Price just you're not gonna just break through this until you get some sort of a setback. So if this is starting to, so now GS right there now has same thing as I said, major support here. So if you look at these charts and then you factor the same thing with the S&P, the Qs that were looked at earlier, is going to start giving you a same idea like where the price goes and what like you can compare these charts because price is price, which is all based on Elliott wave, right? So you could kind of see like, okay, when the price reaches 3 versus 1, reaches that certain fib, how much of a retracement that you can expect on a certain price. It doesn't mean that all of them is going to match exactly side by side, but you're just trying to see like if I would compare 5 different charts, if 5 charts are giving me a same response, like, okay, the price reaches that the 261.8, and if it sets back, what do you think the sixth one is going to do? If the five stock did the same thing, you think the sixth one is going to do anything different? I don't think so. You know, so I mean, peak to drop, three swings down. Here's your third wave, 3 versus 1. Now you can count one, two. Now you can just count 3 smaller waves, 1, 2, 3, 4, 5. You see a lot of these waves right there. They are all extended waves because there's no setback at all. It's like days after day after day, just keep going, keep making higher highs. These are like 7, 8, 9 straight days of straight melt up, as you can see right there. They're like one bar after another. Like this bar right there was inside bar, higher bar, higher bar, higher, 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 higher. You see, like all higher bars, one after another, has a lower bar, higher bar, higher bar. Like you can see, like when the hike was, got taken out. So I mean, it's very typical if you have a shorter one, you're gonna have an extended fifth wave. Okay. It's the same thing with the wave one with the motive diagonal. When you have a diagonal in one, you have a very good chance your fifth wave is going to be extended wave. So this is what I was. So this is a Goldman Sachs here. What else I was working on? QCOM. This one. Um, did I send this thing to anyone? Bit of a model there. This is a pretty good, pretty nice count. I really like this one. I'm gonna take a shot at this one. So we're gonna take a same decline. Okay. For 3, it doesn't matter. You can do A, B, C, or W, X, Y. It's fine. I'm gonna do it this way. So maybe this thing I read. I switch back to the white screen. I turn it into the black one. I was with the fan running here and stuff, the air conditioner, I was like falling asleep. I was like, this is just kind of too dark. So just switch back to the white background. I kind of bright up the room and stuff, all the monitors. And so QCOM, same 3-wave decline. After that, we have 1, 2, down to 78.6, 3 versus 1, 200%, 3-wave setback down to 23.6, and here's your 5th wave. Okay. Now remember I just said what I just said before? When you have a diagonal, you're gonna have an extended 5th wave. Okay. You always remember this. So it's very typical. I don't know if I sent this one. I don't know, why did I draw this? Okay, well here's a simple model of an Elliott wave. Okay. What we seen, like how we label here, is all here. So you can count this thing on any time frame. You can go from weekly to a monthly, weekly, daily, 1 hour. I mean, that's I would stop there. I wouldn't even go down below 1 hour time frame if you're doing any Elliott wave. Like the price starts from the low after every 3-wave correction. Okay. What are you looking for is 8 swings from the low. Okay. So the 8 swings from the low, which is a 1 higher swing, the first wave can be, it will be impulsive, or it could be a motive diagonal, meaning which is the leading diagonal. That's it. There's no third, fourth, fifth, or sixth wave. It's only 2 ways. A wave one can unfold. Once it completes, now you see in this case right there, we have a motive diagonal, right? So then after that, we have an ABC, which we call a counter trend. On a swing, we call higher low against this low. So we have a low here and we have a high here, right? Because it completed this 5 waves. After completion of this 5 wave, we're looking for a counter trend move. The counter trend move in a wave 2 can be a flat, it can be a zigzag, or it can be a complex. That's it. There's no 4th, 5th, or 6th wave. There's only going to be a flat, zigzag, or complex. This higher low swing, which is the wave 2 versus 1, the retracement that we're using from this low to this high, which is a 2 versus 1. Now, the 2 versus 1 typically find support between this area of 50%, okay, toward this. This is the actual zone, which is 38.2 between 61.8. A lot of people will you could start positioning themselves into a 50% retracement. Okay. If you're talking about a swings, according to Gann, is all about 50% retracement that he wants to enter long and he wants to enter short. Okay. Based on the overall trend of the market, if you think like, okay, if the price is making lower highs and lower lows, he wants to short the market. That's the zone that you're looking for, is where you want to build your longs if you're bullish on the stock. So this case right there, the retracement was all the way down to 78.6. There is one thing that I've noticed. I went back. I'm not going to go all the way back here. There's one thing that I've noticed about QCOM. QCOM, every retracement that this stock gets, which meaning the counter trend, basically reaches all the way down to 78.6. It takes very deep retracements, this stock. You see, like every stock has its own personality. The stocks will eventually set back at a certain point, but there's some of them are just literally gonna just wiped off everything. 78.6 retracement is very deep. Okay. Basically, you just like made your way up and just like literally give everything back. And now you're just getting the worrying, looking at the screen if this low is gonna hold or not, because I can count 5 to the upside, and now I can kind of see like how choppy this decline is to the upside. You see like how much price overlap that you have. And if this area is gonna if it's gonna manage to stay above this low. In this case right there, as you can see, like here it puts like some sort of a double top right there. Sorry, double bottom right there at the bottom, and then as I said before, this is where the decisions get made. This is always going to be a last resort, 78.6 against your low. So from here, the price turned around, managed to break above 132.97, which is the high of the wave one. That confirms the higher high. Okay. So from here, your third wave can only be a motor wave, or you can call it an impulsive wave. Okay, so you have 1, 2, 3. Now you have to count five clean, small waves to complete a third wave. Okay. Elliott wave trend confirmation is 8 swings. This 5, 6, 7, 8. And the price has to find support here in this retracement to break above to make a higher high. That's where you can make the case of a third wave. Okay. I'm trying to show you how the Gann swing and how the Elliott works. They have a very similar swings. Okay. So there's your third wave. So in this case, third wave rate reaches where? 200%, right? As you can see right there. Reaches 200%. And then from here, it is due for a counter trend move. 5 up, counter trend move against this. 5 up, counter trend move against the 5. Then you get another 5 up. So in the fourth wave, you have a same flat, zigzag, complex. Fourth one is going to be a triangle. Okay. So this is how the fourth wave can develop. But in this case right there, if the fourth wave will come into a play, Elliott wave defines risk, saying like, okay, the fourth wave cannot enter a territory of wave one. That's going to be a clear invalidation mark. How much is a retracement of a fourth wave? It could be 23.6, as you can see here. Okay, so you can just make a simple ABC move here. It can be 38.2, or it can be a 50%. But in this case right there, fourth wave, if it managed to retraces all the way back down to 50, it has to hold and it has to stay above this invalidation mark. If the price breaks below this invalidation mark, this entire wave count that you have is not right. So then what do? You have to go back to a higher time frame, because if you already are what we are daily right now, you have to go back to the weekly time frame and you have to count your waves right from the low, meaning that the wave count that you are working on, that you worked on from the low, is not right. So you have to readjust the whole thing. So from here, that's your fourth wave. So in this case right there was only 23.6. It was simply a flat. So then from here, now we'll look for fifth wave. Now the fifth wave will be impulsive, just like wave one, or ending diagonal. Leading diagonal, I can actually do it this way. I call it motive waves because I'm so used to it. Leading diagonal, ending diagonal. Impulsive, impulsive. Wave one will have a relationship with wave five. Okay. These two are related. These two are related because they are counter trend moves. So you compare one counter trend move to another counter trend move. That's why we always run. Oops. 4 versus 2 and 4 versus 3. Okay. So we're looking at the same model here, but we're just showing you here on this one. I probably send it to someone if I don't usually draw these, but I'll just. So from here, you have, now you're looking for the same impulsive. Now this case right there was a leading diagonal because you're going up. This is here you have the ending diagonal. This is where what we're doing here on the fifth wave. Okay. But now in this case right there, we're working on a smaller waves of a higher degree. But the concept is still the same. Okay, wave 1, 3, 5, 3, 5, 3. You see, like it just sequences just keep going up and up. So once it completes this 5 waves, it makes a 1 higher degree. Okay, so if you count 5 minor degree, 1, 2, 3, 4, 5, so that makes what? 1 intermediate degree. So then you will just put big 1 here. So now this is your low. Now you have a 5 completed waves. So what happens after 5? You get another counter trend move, ABC or WXY. So in this case right there, this is going to be your wave 2. Now you're running retracement from your top all the way down here to the bottom. Now you're looking for what? 2 versus 1. So what are your typical retracement for these ones? 23.6, 38.2, could be 50%, could be 61.8, or it can go all the way down to 78.6. Okay, so we don't know that. So yes, wave 2 can come all the way down here, as you can see it. So does the corrections and stuff. So, and then from here, so you have 5, 3. So what do you expect next? Another 5. So that fifth wave right there will be a third wave. So that third wave how do you confirm this third wave is underway? When the price will break this high after completing a three-way move. Now what the price is doing is making a higher high. So if the sequence right there is what? Low, high, higher low, higher high, higher low, right? Higher high. What is a typical bull trend? Higher highs and higher lows. What is a typical bearish trend? Low, lower high, lower low, lower high, lower low. It just keeps on going. So when does the trend change? When it takes out the previous swing high. That's the trend confirmation. But that doesn't mean that one swing will take out the one previous swing high. That means that you're just going to rip like this. No, because you have to understand that how long the stock has been taking the beating, though. You know, if you have like a 40, 50, 60% decline in a stock, what do you think? It's going to go like this? Well, I don't think so. It's going to take a lot of time to make his, make his way up. If you have months and months of decline, it's going to take time to you can say like, okay, yes, the low is in. Well, how do you know the low is in? When you have 8 swings. Anywhere you can count 8 swings, you can tell the world that yes, there is a pretty there is a good probability that the low is in. Now you're trying to target is this high from this retracement for confirmation. Okay. There's a lot of ways you can do, like this is just an Elliott with a Gann model. You can do pivots, breakouts. Those one can give you confirmation as well. But there's a lot of ways that you can analyze a price. Depends what you like, and if you like Elliott wave, then you stick with the model. If you like, swings and stuff, well, you can do that way. The only challenge and the most annoying part of an Elliott wave is when Elliott wave goes into the wave goes into the correction. When this is when everybody's gonna hate Elliott wave. These two waves. First, because they're counter trend move, they move against the trend wave, and they're so damn subjective, and there's so many of them. Okay, it's not like you just have like one or two options. You have like 3 here and 4 here. 4. Think about it for a second. 4 different ways. If you were to say like, okay, if I had 2 choices in front of, like if I have 2 odds, what happened here? I have to pick one. It's easy, right? Either it's going to be A or B. You just pick your shot. Like, okay, I'll go with B, or I'll just go with A. In this case, you have 4. So as the price develops and how you starting to see like every day, every hours and stuff depends on a time frame. Because if you're on a daily time frame, it's only a one single bar for one day. So for 1 week, it's only 5 bars. So the 5 bar is not going to give you that big of a price confirmation as and price clarity like if you're starting to go into a smaller time frame. So when you go into a smaller time frame, the LE is going to get really messy. Now you're fighting those smaller waves. It's just to see like, yeah, if I can squeeze, 8 swings from the low. So you could have an 8 swings off the low on a 1 hour time frame, and you're gonna come here on a daily time frame. That 8 swings can show between this move to this move. So you sitting on a 1 hour telling the world, oh yeah, the low is in because I have 8 swings off the low. But if you come back here on a daily time frame, what you can make out of this? Nothing. You see, like it's you have to pick a time frame that works with your risk. It's very important. I always talk about this thing pretty much every single week. Okay? You have to pick one time frame and then you place your trade based on that time frame. Longer the time, bigger the time frame is, better better the price. It is a much easier to count waves if it is going to be much better signals because shorter time frames are all noise. You get too many false reading, too many false signals. You think, I mean, I've back tested hundreds and hundreds of signals for years. Okay, I know the results for 15 minutes to a 5 minutes to a 30 minutes compared to a 1 hour and to a daily and weekly. Weekly is very long. And people don't have the stomach to hold trades based on a weekly time frame. It's just a very big time horizon. Daily is perfect. So but for swing trading, 1 hour. It's a very good chart. Um, that's it. I mean, other than that, I wouldn't even waste time. I mean, here's is a 1 hour chart. This is the same 1 hour chart we're running from April low, and we're right there. We're in July 18th. Why do you even need a daily chart? Somebody can explain me that. Why do you need a daily chart? Everything can just fit on one single screen in front of you. So you have 30% upside. So what do you think that a daily time frame will show something different compared to a 1 hour time frame? It's the same price. All you're doing right now is like if I go back here to a daily time frame, you see, you're just gonna see a lot more price now. So now you say like, well, I really wanted to pick my tops because I have them here on the other ones. Well, because I changed the color. Where's my this one? That's the 1 hour. Yeah, this one. I gotta change this because I had a black screen. It doesn't. So it just. I mean, here you're going all the way back here to October lows. I mean, it clearly shows that the price, like, look right there. Okay, let's take an example here. Here's your high. That's the bear market low, right? 2022, the October 2022. What price did here made a V shape until this day right there. That's where you got the actual breakout. Not here, you see, because price has not made a higher high, meaning against this high right there. This is your high. This is your low. So from here, look how much price rallied to the upside. When you have a deep retracement, two things can happen. Either the price is going to make a double top and reject, okay? Or is going to make his way out. Breakouts are very tricky. You have to be very careful. There's a lot of people looking to play breakout because you're looking for a higher high. Well, how high the price will go, well, we will run our projections. What if the price will just make the double top? Double top fails, then we try to make a third attempt, a triple top. How many times we saw it? We look at the MSTR. What had happened this week? Monday, Tuesday, Wednesday, Thursday, 4 days. The stock couldn't break 455 fib. And I said it before, I was like, this is a 3 versus 1, and it has a 7, 8.6, and we'll go there on that chart. That's where the 7, 8.6 sitting over there as well. That's like this is a sticky zone. It tried Monday, rejected. Tuesday, rejected. Wednesday, rejected. Thursday, rejected. Yesterday, it tried 4 times. Well, yesterday gave up, gave back. Like, well, couldn't break it. So it's the same thing here now. So this is the breakout right here against this high. Here is the high. Here's a flush down. That's your low, right? And now here's your breakout. And now we're making room to the upside. So how much price went up the last time to this high? 9.26%. Okay. You're literally comparing two bear markets. We can go back here to COVID. Okay. So we can just mark this one. That's the low right there of COVID low. So how much upside did we make here? 5.73%. So we have 5.73 here. We have 9.26 here. We have 2.32% so far. So if the previous breakouts were or one was 5 and the other was just rounded off. One was 5 and the other one was 10, right? So what are we actually doing here? Bear market, retesting the high. How much did we gain to the upside? Bear market low to the prior high. How much did we gain here? Bear market breaking out to the new highs, and we're only 2.32%. So if you just, I'm not even worried about what happened back there. All we care about now is this low, where we at now. Now, if you're gonna leave a wave count like this, if you're new to Elliott wave, you just leave it like this. This is the easy way to do Elliott wave. You don't have to get yourself involved in these smaller 1, 2, 2. Those are very tricky, you know, because you're trying to fit 5. Yeah, there is a 5 in there. It doesn't matter where you're gonna count it from here. It's a clear 5 wave as if the price is gonna reach 3 versus 1. But then changing your mind, thinking like, oh, this came down, and oh yeah, this is, you're gonna have like 10,000 different thoughts in your head. But if you just leave a wave count like this, simply one, two, three, four, five, yeah, just wait and see how it goes. After three versus one, you're gonna have a fourth wave. Well, how are you gonna time this? Well, you don't know. Well, you need to find multiple confirmation to see like, okay, yes, I'm starting to see market weakness across the board. How are we gonna see that? We have to start looking at the bigger names, Microsoft, Nvidia. I mean, these are the stocks has to back off. It's gonna put pressure on the overall tech. When the overall tech is gonna roll over, it's gonna take the S&P with it. It's not all about the S&P. That's when most people sit and fighting their life over it over a single chart. Qs, NDX, XLK are the most important. That's it's a tech-driven market. Or you look at the SMH, semis. Semis can trigger, but again, it all comes down to what? A poster child, NVIDIA. So when the big names rolls over, that's when the market is going to tumble. Or just wait for some tweets and stuff from him, and see, day to day, like anything can happen. But you cannot, like, if like, the point is this. Now let's say the market comes back down 2, 3, 4%. Let's say we come back down here, all the way back here to retest this thing. Does this part right there, this is a daily time frame, you think that the 3, 4, 5, 6, 7 daily bars is just gonna say like, well, this is the top is in? What do you, I mean, simply, if you look at them, like, what do you actually make out of it for this, for 5 bars? Nothing. Absolutely nothing. This could be one of these smaller waves that can just kind of give a bit of a setback, and the price can just rebound right back up. What I can tell you, based on my experience, I've labeled thousands and thousands of wave counts. This fourth wave will come into a play if the price trying to close below 61.47. Then we'll start this fourth wave. Other than that, I absolutely don't see any point running 4 versus 2 and 4 versus 3, to be honest. It's just complete wastage of time. So yeah, I mean, how deep the wave 2 was? 6.92%. So if we put the third wave here, 100% relationship of this is a typical retracement. So the relationship of wave 4 with wave 2 is 100%. It's 58.65. 4 versus 2. Then we can do 4 versus 3. We can pin this thing. Oops. Now we have 23.6 and 38.2. So this is our zone to the downside. When it's going to come, you don't know that. Who can tell you this thing? Nobody knows. That's just the fact. Deal with it. This is what we all do. I mean, nobody knows. What I can do is we build zones. That's what we're looking for. We're looking for a cluster of fibs. When the cluster of fibs they're starting to stack together, that's starting to build a wall. That's the area you have to watch now to see if the price is gonna go hit the wall. What's gonna happen? Is it gonna reject? Is it gonna make 2-3 day move and then make another attempt back to the upside. Well, that's where we have our resistance. That's the zone that you just built. Now you have to see if the price is going to clear the zone or is going to start to say like, okay, it could take few days for to call like, okay, yes, we can say that the third wave is ended. I can tell you when the third wave is ended when I'm going to start to see the swing directions are down. I can see a sell signal triggered. Okay, you see, like I will have multiple confirmation, not just from Elliott point of view, because Elliott there's absolutely not. I mean, Elliott only have this. That's it. The third can end here. It can go up here. It can go here. It can go any. I mean, it can end anywhere. But when I use different strategies, right? So that gives me different confirmation. So if I can take 2 to 3 different confirmation using different strategy, that can say like, okay, yes, you know what? I can plot out the same case here and make the case like, okay, yes, now we can look for a retracement because the other ones are confirming. This is why I always says like relying on one chart is very difficult to trade the market. You have to look at things from multiple different ways. And well, it's going to take time to learn everything. It's just to then you have to put it all together. I mean, for me, if I would only take an approach on one single way, I mean, I can trade. I mean, I've done tons of trades just from a wave count. If you count the waves right, that's another challenge. And but using just the point is like just relying on one single chart and then you risk your money is a tough bet. It's really a tough. This is basically you hero or zero. So I look at my style as a trader that what I've learned over the years is that if you would have 3 to 4 odds in your favor, meaning that, direction is up and, if you have your automator signal is in, yeah, I'm not relying. You probably notice that you never see any indicators on my chart. You never did and you never will. I hate them. You know, every single indicator out there in the market is completely useless for me. Okay. I'm a pure fib guy. Okay. That's if you're gonna trade with me, you're gonna trade fibs with me and the actual price. That's how I trade. I trade price. I know what the low is. I know where the high is. I know what the retracement we can run. I know how to run the time relationships and stuff. And we're just looking for a higher high. That's it. We're bullish. We're looking for a higher high swing to the upside. And it's all about the fib work. You have nothing to worry about fibs. That's for sure. But Elliott is all about fib as well. It's a pretty advanced fib work. That's what you learn on in Elliott. Gann swings are just high and lows. See 4 versus 2. So you have 4 versus 2 is you comparing this wave 4 with wave 2. And then you have the 4 versus 3, which is you see the retracements will go from here, not from here to highs. Oops, they went all the way down here. I don't have them. So if I would just put 23.6 here, see, it's going to match 59.95, 59.95. So it's a built-in software that does all the work. I don't have to draw all these big long ones. So you just run in from here, from this low. So you just have to know where to run your fibs, what low and what high. You don't just bid. Most traders, which like they just grab They go to a 1 hour chart. This is a daily chart. They just simply know like, okay, I'm looking at a um they just simply take high and low. Okay. That's the high, that's the low. They just run their typical retracements. Like a newbie style, you know? Just look for those 23.6 here, 38.2, 50% retracement. It depends where the price will stall. You can stop right in the middle as well, and then can turn around back up. Just nobody knows where the price is going to stop, you know? So, so we'll see what happens. Uh, okay, so Q comes back to this 5 completed waves. You see you have 3 down. Price has made a higher high, right? From this high right there. 193. Made a higher high, came back, retested, pop, failed. Okay. So from here, it took the same all the way back down to 78.6. Look at the 78.6 low of QCOM with 120.96 was almost a textbook print. Now it's trying to work his way up again. So the point here for this stock is this stock, every time when it completes its 5 waves, it gets a very deep retracement, pretty much all the way down to 78.6. So it has happened 2 times here so far since 2023, as you can see. So from here, so we have 5, 3. So where are we looking next? 5. Okay, so we're gonna fight our life here now to see how we can make an 8 swings to get ourselves confirmation of an 8 swings from this low. We're not worried about this. From this low, okay, to see if we can get 8 swings off this low. If we do, and then we're looking for this third wave to come into a play. Okay. I really like this one. It's a pretty good, it's a pretty looks good. I mean, if we would do from the low, but you see like a lot the price, a lot of overlap. So we could make a case here of a clear what? Leading diagonal. So what happens after diagonal? You get a counter trend move back up in 2. So what are we looking now? We're not worrying about any of the stuff now. Our focus now is as simply this low against this high. This is where the trade is going to get established. I care less here. Okay. What happened before? It's all gone. We're gonna try to see if we're going to form an 8 waves, 8 swings off the low, is to see if we can get a push back to the upside. This is a clear 3, as you can see, against this 5. So we have this low, this high. This is a higher low, right? What are we looking for? Higher high. That's what we're looking for now. So we'll see what happens. It's going to take some time for sure. I mean, this is a daily time frame, so we're gonna have a lot of the so we're gonna have a lot of price to see what happens, the earnings and all this stuff. So we can just build our zones. We have prior X resistance 182, and this high right there. Why is that? Is because where you have this is where the higher low, low, lower high, lower low, lower high, lower low. See? It's the swings turn down, right? It's because none of the swing has managed to break back, took out the previous swing high. So it failed here, took out this low again, made a new low here. Now it's making its way up, but it still hasn't made a new, hasn't break above the previous swing high yet. So it's working on it. So that's the bet that we're willing to make, is to see if we can somehow get the 8 swings, and we'll target this zone first. Why is this? Because those are lower highs, right, for the swings. Now we'll draw our fibs from this high to this low. We have 50% retracement sitting at 166, 61.8 sitting at 180, 78.6 sitting at 200. Okay, so we have our retracements from this high to this low. So we have that. So we have to make sure that this low holds, but we're not taking this kind of a huge wide risk either, because it's going to be big risk, right? So if you enter a trade and now you just stays in a trade, or you come down to 50%, then you come down to 61. But this pig right there, as you can see, it comes all the way down to 78.6 on all the counter trend moves. It takes pretty deep retracement. And then from there, it turns back around. So we'll see. So yeah, the upside is this. And then if the price managed to clear this, then we can run that 3 versus 1, our typical, the third wave targets. Then we'll look for that 100%, 161.8, 200, all the other ones. So we're gonna, this is the one I would, stuff that I'm showing you here was what I was working on this morning. So yeah, we'll look at the RRG, we'll look at the signal, we have a wave count. I'll look at the swings and see if I'll take 3, 4 confirmation on, we'll see what happens, and we'll take a shot. That's it. It looks
So
good. Yeah.
Mo, so
Hmm.
you said that the Nvidia and Microsoft, led the market rally from the April bottom. So if they are the leading generals, when they show the sign of weakness, don't they take the whole market down? And I think that the cybersecurity companies which had the violent run from April low, they have already shown the weakness. So isn't the next one semi-sector, especially NVIDIA and Microsoft?
It is, because if you look at this, these are the only two the stock in a Mag 7. Well, now, yeah, we have Nvidia. The only stock that actually getting the most benefit out of this AI is Microsoft, right? Amazon is fully invested in AI. Google is in there as well. But then look at the upside on Microsoft compared to the other AI stock. Here's Nvidia right there. But you have to understand this thing as well. Look how long Nvidia and Microsoft was down, though. They were down for a very long time. Like this is 1 hour. This is a daily chart. That was the Nvidia prior high right there of 153. So from 153, it came all the way back down here to 86, which is 43% decline. So from here, we can do the time range, that was what, 61 bars, 61 days, right? So 61 is like what? 2 months? It's a long time for a high flyer stock but which is fine. It's just the three wave, it's April low, market got heavy as well, so everything was pretty much selling off across the board. And if you copy paste this one from the low, where was the breakout? Right here to this bar. It's 54. So you can just draw like this. So you have 61 down days and 54 days until I got the breakout. And now how many days has been for NVIDIA? 70. Okay, which is fine. Your upside is always greater. Listen this really good, okay? Your upside always will be greater in the magnitude and length to your prior correction. Any time that you spend on a three-way decline or of whatever, this is a complex correction here. Whatever time that you spend to the downside, your upside must exceed that time frame based on the percentage, based on time as well. Always like this. You can't, the point is like you can't spend 61 days to the downside and then 54 days to the upside and then you just fail. Yeah, no. There's price will revert, but it's gonna run its course. The next leg up, which basically what I mean by that is the higher low swing compared to your higher high swing. Higher high swing is always going to exceed more on time and price. So you're comparing two relationship, but you can't have just an equal measured moves. Basically, let's put it this way: so 54 now was 71. See, it exceeded the 61 bars. I can show you hundreds of charts. You can name me any chart. I'll show you the same way. How many more it can go? Well, we're gonna find out. We're looking at the same thing here. 1, 2, here's up 3 versus 1. Is NVIDIA going to 200? Well, looks like it, to be honest, if you would ask me. Can this stock get to 200? I mean, I don't see any reason why not. Because the thing is this, now here, I have to adjust this when I was working on this. Now look at Meta. Oops, what did I do here? Jeez. What happened here? God, I hate what it is. Just I accidentally pressed a key uh on my keyboard, and that's what happens. Oh man, this is crazy. Come on, man. You're gonna Okay, well, it's gonna take forever now for me to adjust it. I don't know, I just accidentally hit something. there's some sort of probably a short key or something. Uh, okay, that's better. Really? Let's goof it around. I gotta the Microsoft has a double top at the 740, which we can look at here, right there. You see, price rejected. Now let's see what's the what was the time here? 44. How many did we? 48. 48 did make a new high on a 48th bar, but then it formed a double top. So you can do a percentage 35, 55. Yeah, your always upside is always going to be greater. But the point is like your minimum time for the, like for every three-wave decline, but your minimum time is at least 44 bars. That's just a bare minimum. So now you have a two equal, not equal measured move. I would say like two equal time relationship. Okay, going back up, and now you just have to wait and see if the high, if you make a new high, or if the price is gonna get. In this case, right, there was a double top, and now it's backing off. It's gonna make another attempt. It eventually will, because double tops are gonna get taken out sooner or later. So now let's see how the swing looks. So we have where we have our swing that turn direction. It turned here, now it's turning here again. So instead of me like sit and counting 1, 2, 4, 5, 6, I save myself time. What I'm looking for. This is my high, this is my low. That's all I wanted to trade between this swing. What the price is doing here. Low, high, higher low, higher high, higher low, higher high, higher low. But we need to hold this low. Okay. So our trade is only based off this low against this high. So we're going up. So if we project it from the down here to the upside, and we build our zone. Where we have our zone is right here. It came down yesterday. Now just right there, 705, 700 area. But now what we wanted to do is we want to make sure, well, now we want to make sure, we wanted to see if the price managed to hold this low to find support here, and we'll look for a higher high to take out the 747. 747, which is basically what? A double top. If the price fails, meaning that what? Then it's going to look for a deeper retracement, because then we will have high, then we will have a new low. Any push right there that we'll consider as a lower high, okay, against this high, the trend. Remember we talked about you can do the numbering is the best way to do it, but those ones, some of them are odd numbers. In this case, what is the volatility swing? Right there. You see, this is a swing too. When the one starts all the way down here. I mean, now you want to enter a trade based off this low. That's a what? Imagine this. So volatility swings are can help. It can bite you as well. Because you can't enter a trade here, be in a trade thinking like, yeah, I mean, I'm willing to take this big of a risk against this high. That's what the swing is giving you the read. But you skip that part, we go to a 3-bar swing. That's what we need is 3 bars to confirm our direction of the swing. Either the swing is up or the swing is down. You know? So in this case right there, high, that was a low. Low got taken out right here. See? What happened here? Lower high. There comes your lower low. So you always have to defend the price, like you have to watch the price to make sure that it stays above the previous swing low. That's where the low is of when the direction of the swing was down. So when I'm looking at trades, I'm not worried about this. I care less what happened back there. All I worried about this low right there. Because I know this thing for a fact that if this low got taken out here, have broken support, act as a resistance to the upside. Then we're going to make some room. It's going to come back up, retest this. Then you look for another lower low. So we'll see what happens. As long as the price keep making higher highs and higher lows, we're good. Until one of these swings, one of the previous swing breaks. Okay. This is why I like swing trading more than I don't like for me now I'm sitting like, is it a wave one? Is it a wave four? I mean, I can do all that. That's not a problem for me at all. But this saves me time. And time is money, as you all know that. I mean, market opens, I can't sit and count waves. I want to find trades, whatever I can, what. Oh yeah, well, there you go. So yeah, there's some pressures here. I took a swing 2 times. I did it like two contract. It was peanuts. But on a 1 hour buy signal, those two of them that I was like, nah. It's like something is. Plus, yesterday when I saw this low right there, you see how it turned red instead of this green right there. I was like, I don't know. Plus, the RNG looks so weak on Netflix and Meta right now. And they both had a sell signal on the daily as well, as you know. There's Netflix. Netflix already did the work yesterday. as you can see right here. Sorry, not against this one. This is the low. So we had a move up. That was the initial decline. Yesterday got a bit of a pop. There you go. So now we have a high here, we have a low, we have a lower high, and we have a lower low against these three. We're looking at these three swings. Overall wave swing structure, we need to watch. This is the most important low that we need to watch. Okay. Now at the same time, so watch this. Okay. So the daily time frame has a sell signal as well. There's a pattern starting to emerge here as well. Okay. Swing direction is down. And swing direction is down. So we have a downswing. RRG looks horrible. And watch this 1180. So now we can build our downside zone. We have this. So we take out this high, this low. This will be the first the first zone right there. And if the price really start coming back down, then we'll mark this low. So from 1200 down to 1100. If the pattern plays out, the stock stays in a sell signal, doesn't get the buy, the pressure stays on. That's it. I mean, in order to turn the direction, it needs 3 higher bars anyways. You need 3 days for a confirmation for a swing, for direction to turn around. So that will take Monday, Tuesday, and Wednesday. So by next Wednesday, you're going to have an answer if you have 3 higher bars off the lows. Then you can say like, okay, now I want to fight my life over this low because now the direction of the swing has turned up. So it's going to become swing up then, not down. So it's much easier, you have a direction, you have swings working based off 3 bars, and all you trying to do is you're just trading only this piece of an action, not this. You have a whatever wave count that you have running here, nobody cares. This is your zone right there, is to establish a trade, which way you want to swing. You want to swing up? Well, this screen is not showing you that. Should you wait for the direction to give you the confirmation? But then if you do that, then if the swing turn direction here, let's say you got a massive pop on Monday, then you got the Tuesday and Wednesday. If this is where the swing turns back up again, you just like literally wasted the entire move, right? So which is the perfect way? There is none. There is absolutely no perfect way to trade. You can sit and assume whatever you want to, there is no strategy has ever been written or has ever been tested or is out there that will give you the golden signals and the golden prices. Just the bottom line is that you don't know. Nobody knows. You have to believe this thing. We all trade the unknown. Where the price will turn, we don't know. Where you enter the trade, do you enter the trade when the direction is down? Well, then when the direction turns back up all the way to the high, then you're thinking like, well, I wasted the entire move. I should have bought something. So would you, so how are you going to time all that? You're buying something on a downtrend. And this is not a huge downtrend, just giving an example. Like we're buying something cheaper, which is on a downtrend, but then we're hoping for a massive reversal. Well, that reversal can happen, but it's going to take a lot of time though. You have to always understand that how much of a price of, we're talking about a good volume stock, how much of a good running stock has made a run to the upside. Well, it's gonna hold its ground at some point. It's gonna go sideways. Yeah, it's possible. So we'll see what happens. I didn't even took a shot at Netflix at all. I mean, it's expensive stock, first of all. Buying premium 156% IV. Expectations was very high on Netflix. And and they play the sneaky game now anyways, which they never report their subscribers anymore. They used to took a lot of hits before just based off subscriber numbers because that many people cancel. It's a typical thing. People come and go in every business. That's normal. And then um, they just stop giving these numbers. They don't give any subscriber. They don't people nobody knows that how many subscriber numbers subscribers Netflix has now. How many people cancel Netflix? We don't know that. Before it because of subscription business, everybody was tracking it that way. And then they stopped giving the subscriber numbers. Look how much Netflix has rallied ever since. It's just, like it's the same thing like on certain stocks, like Apple did back in 2008, they stopped giving guidance. Tesla is doing the same thing right now, right? Each quarter that comes in, they don't even give any guidance anymore. They don't have to. But then when the company gives guidance on earning, that's where the stock responds. Lower guidance, I mean, look at what Lululemon when they did their earning. Look how the stock got killed. The word earning most important is the guidance. Yeah, that's is gonna beating numbers. Yeah, fine. You can beat top bottom, or you can just beat the top, miss the bottom. But as soon as you're gonna lay out your guidance number, that's where the stock is gonna respond. Because that's when most of these stocks are trying to make the mean reversion. If the stock went up too much and then all of a sudden companies are like, no, we're not expecting this much for the next quarter. There you go. Now the stock is toast.
So, well, can you go over Microsoft?
It's the same thing as a Nvidia.
Yeah, but still, it's a key stock.
I know. It's the same thing as Nvidia. There's nothing three versus one. You see, like if you look at S&P, you look at the Qs, we just looked at all of them, right? So what do we see here? It's the same concept, right? As the April low, 1, 2, 3. So where we at here? 261. This is actually just went right above 261.8. Huh? I'm really thinking about shorting this stock. A small trade, nothing heavy. Just to take a stock, a bit of a breather. So it's right there, 261.8. Now, if we go back here to NVIDIA, well, you always have to look at this way. The stock's always going to get more upside growth compared to your index and ETFs, right? See, 261.8 here's a 200 for NVIDIA. So now if it's same thing, we just looked at them, we looked at, oh boy, we looked at here on the Qs. That's what I'm that's what I'm saying. If these two are, this one is barely, fighting his life right now at 200 right now. But if those two are already, I mean, not NVIDIA, only Microsoft is already there at 261.8. Now, let's say from 261.8, Microsoft's trying to back off. Microsoft earnings is going to be baked in. Okay, this stock sitting almost there at 3 versus 1 can get a bit more upside. Microsoft is not gonna have. It's gonna be a big. That's what I'm saying. This we'll see what happens. I know earnings are always tough to um to make a call on it because you don't know how the stock respond. But what I think, what I see, because I do a lot of research. I just this earnings season is gonna be fully baked into the market. Beat up stocks are the one they're gonna pop. Those are the ones that I'm gonna play. Few of them. Um, then all these higher flyers, like the ones that just had a big, huge upside reversal, that actually made quite a bit of room by taking out the previous high, all-time high, and are the ones that are gonna go sideways or just gonna go flat. Well, we had a Nvidia so far, so we'll see what happens to the rest of them.
Mo, can we talk about our rotten apple?
Well, we covered Apple, yeah. I posted that thing.
Yeah,
Mhm.
but can you just walk through it? It seems like it's the one that might, make the greatest upside and
This
on
is
some.
what I think. I mean, I could be wrong. Okay, it's nothing. There's two stocks that has making a run lift in the market, overall market, which is Nvidia and Microsoft. We've been talking about this. If these two stocks starting to cool off, kind of go sideways, then what do we have left? We have Apple left. Well, Apple goes, it's going to lift up the whole market. We have Amazon, we have Google, we have Meta. You know, these big heavy names are they're they haven't made Meta is gonna fight the double top. They haven't made the reach to the 52 weeks high yet. So summer markets are always challenging. It's the worst season to trade, to be honest. I'm not gonna, it's just a fact. And I know that everybody, including me, sometimes like it's not easy to buy a market here at that high. I get that because you just have that fear right now that, well, if it's gonna set back, it's gonna hurt. But at the same time, well, if we're if we're gonna throw if we're gonna risk, well, we should have a plan and we should know like, okay, well, we are well aware that sooner or later the this fourth wave is going to come into a play. When is going to come into a play? Oh, we don't know that. And then just being stuck in a position because you enter here and now you end up coming down here in the fourth wave and you sitting up here in the top. So yeah, timing is always going to be a challenging part. But back to this, at least I can filter a lot of noise from day to from everyday pricing, because I don't have to go this deep down to make a case for 4 versus 2, 4 versus 3, this and this. These swings can give me a much sooner, okay, confirmation against these just against the previous high and low. So so what we're trying to do is just like, I'd rather focus on a particular swing on a stock and just make a bet on that one instead of like make the overall case, because if these stocks can run, because Apple can run on his own. If Apple runs, that's going to lift up everything across the board. It's just how huge that stock is. Semis, yeah. I mean, well, if semis NVIDIA runs, NVIDIA is going to benefit all the other semi stocks along with along with SMH. And the only stock that is getting really taken advantage of it is Microsoft. None of the other ones are doing the work. So we'll see what happens. Again, earnings season is very tricky. So we just uh we just take it day by day. That's just the way it is. No sitting and oh man, this is no, happened here. What did I do? Okay, there you go. Okay. This is okay. This is what I posted yesterday. So we're gonna focus on this part, not coming all the way back in, only about this. So here's Apple. Apple ended the week with an inside bar, meaning that no high and no new low, not the previous week low, weekly low was taken out. It just stayed range bound. Okay, so here we have wave one, diagonal, down in two, 50%, 3 versus 1, 200%. Here's a sideways chop. This, when you have a weekly inside bar, you are either in a fourth wave on whatever time frame that you look on a 1 hour hours, and you're not going to see much in a daily time frame. On a 1 hour time frame, if you ending the stock ending the week with an inside week, is going to be either a complex correction or it's going to be a triangle. Just remember that. Okay. The inside bar is it's just you just ignore it and you don't trade it, and you just have to wait for the price to see which way it breaks. So if 3 versus 1, 200%, we make a case here for trying for a triangulation. You have an A, B, C, D, and E. Now, according to the rule, okay, of an Elliott wave, E wave must stay above the prior C wave low, which is the 207.57. 207.54 is the wave count invalidation for this triangle to hold. Okay, E wave cannot retrace below the C wave low. So this is going to be a wave count invalidation based on a triangulation. 4 versus 3 at 38.2 at 209. Okay, which are typical, 4 versus 2 and 4 versus 3. So we have that here. E wave versus the D wave. Okay, 61.8 retracement. That's a typical E wave retracement is 61.8, 209. So, and now from here, how do we confirm the triangle has ended, had run its course? Is when the price breaks above the prior D wave high. This will confirm the triangulation was completed here, and now we'll look for a fifth wave to the upside. Okay, so we're just gonna simply mark this high, which is right there, which is this 216.23, and then and we'll see how the fifth wave goes. In this case, if this wave count is right, we know that we have a diagonal here. So when you have a diagonal here in wave one, it has a very good chance it's going to have an extended fifth wave. So we'll see what happens. Okay, so this is the trade for Apple. Apple has a weekly buy signal, but it has a sell signal on a daily time frame. So that needs to turn around if it has to invalidate the sell signal, and then it goes from there. So it's a pretty mixed picture. But the positive thing about Apple is that it has a higher monthly bar. Okay, so that would help the next whatever the end of whatever days are remaining for the to end the month. So because Apple was sideways for 2 months. Okay. Go ahead. See, Apple was here sideways. See, Apple took a huge dip here at April low. From April low, it ended the May with an inside monthly bar. Then it ended June with another inside monthly bar. So we have two of them. The stock, Apple hasn't done anything. And how much of the market has recovered and ripped all the way back to the highs. This month, Apple put a higher monthly bar. Right there. See, now it's green. It was black for 2 months. So
Mo, due to it having a higher monthly bar now, does that like increase the probability that you would think that it would make a push into the end of the month?
well, the upside, we have projections that we can use, but it depends on how you position it. I mean, if you want to position yourself based on a monthly bar, you just have to take the previous month high and low. And then you can say like, okay, if I can just play the breakout to see if the price can take out the previous month high. So the previous month for June, high was 207.39 and the low was this. So now if anywhere, so this was the close was what 211.18. No, the close here, well, this is what a month ended. So the close here was 205.17. Okay. So from 205.17 was the close was right there. That's the high, that's the low, open and close. So now like first of all, 2 inside months for a Mag 7 stock, it's extremely rare. Okay. It's a very unique kind of pattern you can find in the market that for 2 months up a stock that makes so much of the market. Okay. It just literally went sideways for 2 straight months in a row. You don't see it anywhere. You get the inside month here, but you don't get to see two of them. So two of them, they move when they break. So in this month, it got the push. It still has it's gonna this bar right there for until the close. It's just gonna stay green now anyways. It's just a matter of where it's gonna close. Okay. So we have a low here of 195. Now, if this bar reverses, it can happen. Okay, it will turn into a outside bar. Other than that, it's just gonna stay green and it's gonna end the month. So if it has, that's a good positive sign. Weekly has a buy signal as well, but the daily doesn't. Let me show you here.
But the daily, it's close to it. It's less than 1%, isn't it?
Yeah, right there.
Yeah.
So this is the daily right there. So it triggered here on this bar, which is on 7.8. The high of the previous day is 7.7, which is this high right there. So to get rid of this, it can happen, but the price has to push up to break above this high right there, which is 216. Okay. So from here, upside target for Apple is 219 and 227. If this fails. So as you can see right there, the price is literally sideways. It's been chopping around because we had the inside week. It price just stays sideways. So now it has to make that push to the upside to get rid of this. So now if we go back to it's gonna change different times. Weekly has a buy signal, I know that. So we'll see what happens.
And how is RRG on it? On the daily and weekly, if you don't mind.
It's okay. Still here in the leading quadrant. These are all the Mag 7. Look in the video. This thing is just on his own. It doesn't need to be a stock market. It's like a country right now with his own GDP. $4 trillion market cap company is bigger than the economy of United Kingdom. Any European country GDP is not even 4 trillion. You have a stock right there worth $4 trillion. Think about it for a second. A one individual company can worth more than the entire country GDP. There's millions and millions of people live and eat and whatever. Their whole economy is smaller. That's crazy.
The other stat I heard in an interview yesterday was the total crypto market is still less than Nvidia.
Yeah. I mean, number one is always gold. There's no such thing worth more than gold. Gold is I don't know, 17, 18 trillion dollar market cap. The Then Nvidia. But 'cause every country has gold reserves, so yeah, I think the gold, I think it's like 18. Yes, it's
Yeah,
17,
close
18 trillion.
or 20 even was
Could
the
be
last.
20, yeah.
Yeah, 20 because of the price moved up recently
Correct.
and supplies increasing.
Yeah, 20 trillion. Yeah, every country has gold.
But the crazy stat, people say, Bitcoin's going to catch up to the market cap of gold, but if gold doubles in the next 7-8 years, let's say, and and it's 40 trillion, does that mean Bitcoin's going to eventually catch up to that?
People have massive bold calls on Bitcoin. I simply don't do that. I mean, there's one thing that I know about Bitcoin. I mean, whoever owns it and who likes to trade it, that just pay attention to the swings. Bitcoin works really, really good with swings, especially with fibs. Okay. So I'm a master of fibs. You have nothing to worry about there. But I mean, I don't care about these people tracking this halving and cycles and this and that. I was like, dude, relax. I mean, just here's a Bitcoin chart. It fires really good signals. It gives you perfect swings along with fibs. What else do you want? Right until the swings are in the same direction. If the swing direction will change, then we'll look to the downside. Until then, when this thing is going to go and where we're going to go, we simply don't know. For now, upside 135, 180. Okay. That will come into a play when we clear this zone right there. Look at the high right there for this week. You tell me that Bitcoin doesn't work with fibs, you know how to run it. I'll give you the tops. I trade Bitcoin a lot. I do with the future market. I'm always on. I'm like, not always, like when I it works really good. Bitcoin, especially with fibs though. I was like, first time when I saw it, it's the same. There's a lot of stocks that I can name it as well that works really, really good with fibs. Meta, Nvidia, I can like name a lot of stocks. because when you make wave counts and then when you see the actual relationship with like 2 versus 1, 3 versus 1, like some of these fibs, they're like literally a textbook print lows and highs over and over again on a wave count, then you starting to realize, like, you know what, this is a very well respected stock that always, you know, shows a response, either is going to hit the certain fib, is going to back off from there. So you just get to see it like over and over again when you make wave count. And some of them are a little sloppy, to be honest. It's just a little bit like thin liquidity, doesn't move as much. They can give you those upside print, but they just don't really take the actual pause. Basically, like price reaches a 3 versus 1, take a pause. There's some of them are just kind of like whipsaws around up and down. So Bitcoin works really, really good with fibs. Okay. This is a signal fired. This one, Ivan Rubin, I think was asked, was July 2nd. And this was the signal fired there. And that was, I even told him, I was like, should look for a Bitcoin to pop. This same thing happened here as well. These signals works pretty damn good. This was a good one here. Look all the way up here. It's gonna when this one will come as well, so we'll see what happens. So for now, I mean, it's a third swing to the upside. So we have this low, we have a first swing here, there's a second here. That's the volatility swing, and then this is the third one right now. So it's just a matter of like, this week what we did, we Monday we hit this mark. I was watching this, and then Tuesday, Wednesday, Thursday, Friday, just literally went sideways, which is fine. I mean, this is the resistance right there. Now, if the price does manage to make a move, it can, dance around here for some time. It's okay. But you don't want to come and close below this 111997 high. Just watch that one. That's going to be an important one to watch. Okay. So this is where we had our, the swings down right there, you see. So yeah, there's many ways you can project upside, but this is a simple, clean, easy way. Follow the signals, follow the direction of the swing. Swing is up, you always look up. If Bitcoin's gonna get hit with this one of these sell signal, it's gonna have a pretty good chance that the direction is gonna come, it's gonna turn back down like one of these. You see, all swings right there that went down after this one right there is almost the top of that day. Yeah, but this thing doesn't triggers on when the Bitcoin is run. It always based on a close. Always remember that. Signal is always fires based on a close. It will never fire in the middle of a working candle because we're using a high and a low and an open and a close. So we mark the high, we mark the low, and we have the open. Open will be instantly right there with the time. It's just a matter of like, where does the high was, what was the high was, what was the low was, and we just have to wait for the end of the day to see where the close was. And so when the candle closes, that day, if the conditions get met, that's when the signal is going to trigger. That's what we have several conditions on. So yeah, this fine. Bitcoin is okay. So I'm just gonna watch. Did Apple here? Rest,
So Mo,
yeah,
Mo. So
yes,
if
yes.
if Apple is anticipated to make such a move, and provided that Nvidia and
It will be
QQQ
done.
hasn't hit the 261.8% fib, is it more likely that the market is going to keep going up?
Could be. Looks like it. Definitely looks like it. I don't know. To me, I think the video will get to 200.
Yeah, the earning is August
Yeah.
23rd?
I don't know if they're gonna toast those people in earnings, but I mean, if you know, I don't know when Apple reports, but I mean, I'm not expecting this move on Apple next week before earnings. I think if Apple's gonna pop, is gonna be on earnings, you know. So
Or some major announcement like
correct,
Apple acquiring Perplexity
correct,
AI or something.
correct. If anything else comes between, yes. But other than that, yeah, stock usually don't make a wild, massive move, I mean, days before into earnings. Yeah, they usually just wait. And then on the day of earning, if the stock is ripping to the upside or if already getting, that's never a good sign until the close. Because you know that's clearly tells you that their earnings that are coming in is fully baked in. Yeah, stock just the day of earning, if it's after the close, the stock just has to wait, stay sideways and just chop around, end the day, and wait for the earning to come and then respond. There's a lot of ways that earnings that as soon as the market opens, stock pushing up. I mean, you can look at the implied move of the stock is $5. Stock has already went up $4 right from the open. Wait a second. I mean, you have a implied move of a five points. Okay, then you're looking at the ATR, average to range is a 5 point. Stock has already moved 4 points right from the open in the next 15, 20 minutes. Okay, so your ATR is almost there at 5. Now you got earning coming at 3 o'clock. So now you want to bet on earning that stock is going to make what, a 2 standard deviation move? I mean, it can happen. If not, well, stock is going to go sideways. So there's very, I mean, look, earnings are pure gambling. Okay. Nobody knows how the stock is. You buying a stock with a crazy elevated premium, extremely high IV, especially single calls and puts. If the direction is right, if you catch a big move, yeah, the reward is there. But what are the odds? You know, some of them you have to play like 10 of them just to get lucky on 2 or 3 of them. Not every gun, you know, you you buying premium on such a high IV, you need a good push to to make money on that move. You paying such an expensive premium. So it just, I mean, I play them. Maybe we play Nike, right? So I'll swing few here. I'm not a very huge fan of like, oh, this combo, I want to jump on this. I don't care. What do you think? The stock is going to trade the next day? Like, yeah, everybody just want a big push. Well, I mean, it will come, but it just, they were very, earnings are always, they're fun to watch, definitely, but I just, I every earning just think like either it's going to be a hero or it's going to be a zero, which you're going to find out pretty quick. Stocks opens lower and then they're going to open flat and it's just too much movement. Early earnings are really good, especially the ones that report in the morning, because once they report in the morning around like 6 o'clock, then you just only have 2.5 hours left for the stock to open. The ones that after the bell are the worst one technically because the bell rang, right? Market closes. Now the stock reported earnings. Now the stock is going to trade after hours in the post market all the way until 7 o'clock. Okay, that's when the stock trading will stop. Basically, on the extended trading will end at 7 o'clock. So you have 3, 4, 4, 5, 6, 7. So you have 4 hours in the post market. Then it trades overnight, but who cares? That's just half the price action. It's just a joke. Then the market opens up in a pre-market, then the same stock that traded in a post-market, then you like sit and like, oh, I wish I'm gonna get the big open tomorrow. Now you have to wait for the pre-market. The pre-market open and the volume kicks in here. Now people positioning the same stock, if it got hit or something, are they gonna buy it? Depends if the stock, if they had a calls on them and stuff. The stock is trading in the pre-market, running their levels and stuff, and see if they can pick up shares. Who knows what? And now the stock has to trade for another 2.5 hours until the bell is gonna ring. So there's too much movement for a stock, you know. So yeah, the early ones are really, really good. The early ones are like McDonald's. Like most of all Dow 30 stocks are always early. Uh, all Dow 30 stocks it reports first thing in the morning. So the those are just you don't you know mm, like J&J. It opens up and then right at the bell it pops up even more. So just like let's see, you got a huge pop all the way right there to 166.30, and I just backed off. Okay. And name me one person in the world who can give you these penny prints. I like to know. What else we have? Uh, to that's just Bitcoin. Tesla is Tesla. No, it's not. No, It's, Tesla triggered a go signal yesterday on a daily bar. Hey there. The last go signal was here on this bar. The one was back here. That's the third one this year. Keep that thing in mind. No, it's fourth. This one failed. This is totally different. These are indicator signals. So this one right there worked really well. This one worked really well against the previous swing low. And it fired yesterday again. So we'll see what happens. I mean, Tesla needs to break this. And it has to break this. This is a zone Tesla needs to break. And it has to stay above this low. That's the trade on Tesla right now. That's your upside breakout against this. This is where we have our signal. Right there. So this signal fails at the low of this bar. So you have to remember this, okay? Every signal, the trade that I'm taking or I'm showing you, whatever, you're gonna notice gonna have a 1 bar stop loss. I did it this way for a reason. These ones, oops, these ones are different. Like these green and red arrows that you see here. They're totally different signals. I just look, I've done charting for a very long time. I've done charting more than I don't know people like I don't until I get to know you guys. I've done a lot of charting. Okay. I'm just it's not like I hate it. It's just I think with this newer technology and where the things are moving with this AI and everything, I think it's just everything is just like should be all coded. It should be all like fully automated. I think that's where the future trading will go eventually one day. I mean, there are hundreds and hundreds of signals out there, like go, no go right there. This is a signal subscription service as well. Okay, you can go to go, no go charts.com. You pay whatever per month to have access to these signals. So these are different ways. What this guy did, that he took 3 or 4 indicators and he merged all 4 of them. Okay. So that's how he did it. But it doesn't mean that every signal will be the golden signal. But as long as you can average more than once the fails are the ones that are gonna be the end up was gonna, the ones gonna be end up making money. That's where the back testing comes into a play, right? So that's what I've done it. So I know, but I cannot predict the future for myself. Or like for I cannot predict the future, what is going to happen, but based on all the back testing that I have done, the trades that I have taken over the years, there's a very big potential. It requires patience and it requires a lot less screen time. Okay. It's just it's just like I can do so much work during the day because I'm always doing something. It's just like signal fires here 710. This is your stop loss of the previous day, a low which is 7.9. That's it. You take an entry here as close as possible to the buy price. I mean, if you're not going to be end up paying the exact 300 because the signal fires on the next day, on the 11th, not on that day at the close. It waits for the next bar to open. That's when the signal is going to fire based on the previous bar. I have conditions, and there's a lot of scripts running in the back. You're not going to see it because I'm hiding all those, because that makes the chart really like a lot of like I'm not going to be able to read them. Can be fibs everywhere, lines, this and that. It has that feature of a show plot. I just remove them. I don't want, I just want this. Let everything runs behind the screen. It's working. So signal fires here on the previous bar against this stop. That's it. That's the trade. So if the stock comes back up, it backs off, that doesn't mean, as long it has this, it means the signal is valid. I'm not going to fight it. I'm not going to overreact it. I'm going to like, oh, my trade is down because I just bought them and now it's down the next day. It was okay. Well, it hasn't taken out that low. So stay in a trade. What happened here? Look at this from here to here. It requires a lot because you have to understand that these are daily bars. I can go to a 1 hour time frame and then you're going to see a lot more signal fighting back and forth because it's a much smaller time frame. Much smaller time frame and you take a bigger risk. When you bigger risk, your odds of getting failed much more often. Now, if I go back here to a 1 hour time frame, here you go. See, back and forth. Buy here, sell here. Buy here, sell here. Like back and forth. I mean, I take them. Sometimes I do. Sometimes I don't. But I have to look few other things on the Optima screen to get to see if I want to play a short term. I want to swing a short term trade. This is excellent swing trading. You gotta make more money in swing trading than your day-to-day BS day trading anyways. It's a proven fact. Long investors, swing traders always ends up making more money than a day traders. So you just I mean, the only, whatever, I mean, I don't have to do it. This saves me time, you know? I don't, Elliott, swings, everything is here. Everything is in here, is running. I know where the pivot is, all the pivots, everything is in here. So it's just a matter of like, I want to see. Yeah, I want to do swings. I can do here. I am looking at the other one. Oops. Yeah. Now you see more. You see, now you see these lines appearing. Green, red. These are pivot zones. You see, it shows here a break. There's a break. So these are, call it 20 bar pivots. So it's all there in the back. So it's just the way it works. You know how many freaking, sorry, I want to cuss that one. How many months, day and night I have to sit and use my brain to write everything? Then I have them. I was like, okay, now I gotta test them. One after another, like, taking trades after trade to see what the average testing looks like. It took some months and months. That's a lot of work. My wife was like, "You crazy?" I was like, "It's not about me being crazy. It's like I just wanted to eliminate charting because I'm done. I'm tired. I don't want to do that. Just want to do this. It's easy. It just saves me a lot of time. I can move on and I can do a lot more. Trade is a trade. If I have a if I have a signal here that's given me a well-defined risk, okay, what's the brain damage? Take the shot. If you're gonna sit and judge, you're like, I don't know, it's gonna go up. Oh, I don't know if I should buy this trade. I'm gonna ignore it. I'm gonna move on to wait for another my favorite one. If you wanna have that kind of a mindset and a well, then you're just guessing. You don't know anything. If the system is working, is if it is look at this. So that you gotta push. What is this, Google? So signal triggered here. Sorry, on the next day, not on this day. So triggered on the 11th. You got a 1 day push. You got 1, 2, 3, 4. You got 4 straight down days. But yeah, I mean, if you open a trade here, you enjoyed one single day, and then you took a beating for 4 days in a row, right? You'd be like, why am I in a trade? I was up 4 days ago as soon as soon I entered the trade because there was a higher bar, as you can see, right? That's the higher bar after this closed, right? And then for the 4 days, it's been making lower, it's been printing lower bars. But the bottom line is this, your damn low, which is right here, didn't break. This is where the signal or the market is gonna test your nerves. Should you sit and wait and like constantly babysitting these candles every single day? Well, you can do that, but you just overreacting, thinking like you took a risk, you set a stop loss right there. It's gonna instantly come to your mobile app on your desktop. You can do whatever you want to do. Go walk a dog or something. Go out in a park. Do something. Go out for a lunch. Who cares? Let the risk work. Let the trade breathe. It's on a daily time frame. Look from here how it rebounds. As long as this low right there holds. Signal is valid. Look what happened here. And there you go, you see? Until. So this one triggered where? 411, 613. Yeah, it's not a very fun ride because you have to understand one thing. You buying something, you always have to look at the take a really good look at a chart first, what actually you're buying and where you're buying and what you can expect. Look at what's going on? Look at this down move here. From here to here. You know it's going to take time to actually secure and form the bottom, right? For any stock, it doesn't matter, just the Google, it would be anything. You buying something at the bottom using a one candle risk, low as a risk on your money. And you're thinking like, okay, well, let's see if it holds. If it holds, if it's going to go, it's going to go. I'm in. But I'm not going to sit and babysit these candles because let the system work. Give some time, let the trade breathe because you know the stock has taken such a massive beating for weeks and months. And now you finally trying to see like, okay, yes, there is a hope here. There's a potential that bottom should be, could be forming. So those conditions that I have them in there based on the pivots and, all the, criteria is that when it meets all these conditions and it fires, you take an action. You don't blink. Take a shot. Swing it. And wait. What's the worst thing going to happen? You're going to get stopped out here. What do you think is going to happen? You're going to take a loss on a trade. You're not going to have a full loss anyways. Any premium that you're going to buy for the next 60, 90 days out on time, let's say, okay, you can go out 12 months. Who cares? You're buying a daily time frame. You can go out as far as you can. We talked about it last week. Just focus on delta. How much delta you want to carry? You want to take a 50 delta trade? Your risk is only 50 points, 50 points per point, $50 per point. I'm sorry. So you just, worst case that it comes back down, makes another lower low because the swing didn't hold. So what do you think is going to happen? So once you have a sell, you think there's never going to be another buy? Of course there will. There's no sell to another sell. Every sell is going to have a next is going to be a buy. And every sell right there, the next one is going to be a buy. But it requires a lot of patience, a lot of time. Look, I took this one, I added leap, right? On this entry right there. I see if the way I play this, as I said, I buy shares, like I'll buy like 50, 100. I own it. Now I own the sucker right there. The price that I'm going to open and trade. I got 50, 100 shares, no problem. And then from here is just, now I just got to have to set up an option trade based on these prints. Set up an option, option trade to target these ones. Because I don't know where this is going to go, how far it's going to go. We don't know that. From here, it triggers back here at 176. 176 took a big flush down. This day right there, another fight. This is a mean reversion signal. Mean reversion signal is what I did was I took an accumulation phase, then I made a distribution phase for a stock. I ran a zigzag script in there, draw these fibs here, It fires this buy signal here based off that fib, based on a zigzag pattern. And then in C, if it breaks out, takes out the prior swing high, which is the zigzag pattern, right? So you have 3 swings here. So now you're looking for the price to break above. These are the mean. These are good. I take them, but only on a good volume stock. I don't really randomly jump on some whatever stock that I'm gonna see. A good volume stock, Apple, any Mag 7 stock, mean reversion, well, definitely will buy right away. So these are based on a zigzag. The actual signal fired here, and then you just had these kind of a whipsaws and made all the way back up. I mean, I don't know. This thing can go all the way up here. Who knows how that thing is gonna go? Let me show you several stocks. Look in the video. Still going. It fired here on this bar. It fired here on 410 against this low. Look, it's almost going to give you a heart attack. Look at the low. Look at the low of this bar compared to this low. Same trade. Look where it is right now. I haven't got a sell. You think NVIDIA is not going to get a sell signal? Of course it will. That's going to be the next one. It will come. Well, we're going to wait and see. It's right there now at 173.12. Next one up is 182. This one up at 196. So these are all the upside. I don't know your style of trading or what you guys do all day, this and this, but you have to understand one, you have to believe what you do. If you don't believe what you do, there's no point for you to even sit in and trading, to be honest. Build a system. If you don't want to sell, just copy paste it. Who cares? Let the thing work. So let's look at this one. So we have this one working. Okay, it's choppy. I understand. Looks, but what can we do? If price is like this after a signal fired, right? We took a trade. Now if you're just going like this, what do you think what we can do? Is this the way it is? But is it invalid? No. Is it below 320, 325? No. It's good. So now the thing is this, like, okay, well, I don't know how much of the stock is. I looked yesterday. If you wanted to close the trade after a few days, you're thinking like, okay, yeah, I got the push. You can close the trade. You're out. You're done. You can always do that. Sometimes I do it as well. So like, screw it. But I'm trying to climb up here. Those are my targets. But if I'm not even there, and if the signal is valid and is working, well, I'm gonna wait for my target. That's my plan to enter a trade, but where my target is. Okay, well, look at this. UNP. I bought leaps here. Okay, based on this mean reversion signal. This is a UNP, Union Pacific. I set a target on it 240. Okay, on this trade. Now on this one, if you're gonna see the screen, you don't see that line right there like this one. See the red and blue line? That's the high of the previous bar high. This one is not gonna appear a line on it because this is a difference. This is simply a zigzag pattern. Okay. because everything I see at the price accumulation, it goes to distribution phase. Most of distribution phases are zigzag patterns most of the time. So I I script the whole thing, put all those fibs on them. Well, you know the fibs that I know, and then and then if it fire, it looks for those higher bars, and once the higher bars, and it just gives you the entry as they call the mean reversion. So in this case right there, you zigzag pattern on these one stop losses goes all the way to the bottom. So on this one, you might end up taking 2 to 3 bars lower stop loss. So instead of this one, these ones are, look at this. Look at this thing. So signal fired here on 411, pop next day, down, down, sideways, and then down, went sideways, got a big pop right there. Massive reversal. But look at this low of this bar, which was 4.9, and this low right there, 4.24. Did it invalidate the signal? No, because as soon as the price is gonna come back down and takes out this low, this is no longer valid. Just cut the trade. Don't even think twice. Just cut it. Move on or find another one. That's my plan. Set a stop loss here, and that's my targets. So I set a target here on this one at 240. The high was 240.74. I cashed out those 2 leaps that I bought. I think I paid like $1,440. Like, yeah, $1,450, something like that. That's it. Call it off. It's like good. I was like, that's my target right there. So these are a pretty well defined. I mean, I could hold it if I wanted to, but I was like, if I already get, I'm looking at stocks based on ATR. I'm looking at stock like, okay, if the stock has already completed his one word, like if it really got a nice push, end up being a 2 standard deviation move, stock is done for the month. It's just gonna go consolidate or kind of go sideways. It got hit 240.74. Now it's all the way down here. Now with this thing going on with the train with this. So then it got the sell signal triggered here. Got a huge bar. Got a sell signal triggered here on a 14th on the previous this bar. Now it has a stop loss right there at the high of this bar at 240. So you're risking from here to here, whatever you can find entry on that day when this thing triggers. That's your entry, and you want to try to get as close as possible. You're not gonna get them because the price pushes up higher, you don't want to have a bar to have a higher bar. You want to have a lower bar because you want to come down because the signal fired to the downside, not to the upside. So you just have to wait it out and see how it plays. It's a patience game. You could be doing any work from home or whatever you're doing. Swing the trade, let the thing work. You have alerts, and that's it. We'll find out the results. What else do you want? Sit and babysit every single candle, and this is a third wave, and fourth wave is coming, and one is coming, and one is not is coming. How much is gonna go down? Who cares? Let the screen do the work for you. So what was this FANG? This one was failed. So yeah, they're not like every one is gonna be a golden one. Okay, some of them will fail, but we'll see the average overall. So this case right there, energy, it had a sell signal here. So it went up, went down. There was a buy signal triggered around here. Somewhere around here with a stop loss at the low of this bar. So this is where I set the stop loss on that trade at the low of this bar. And then energy got heavy this week, sorry. Got a huge push right there, the buy signal. gone. Why? Because the price has made a lower low. The next day, stock pop, fine. Sorry. And then the next day, like there yesterday, yeah. Now what happens here? Now it has a, why is this thing show? It has a lower monthly bar. So monthly bar is lower. So that doesn't mean the stock cannot reverse. It can, but it doesn't have a, it doesn't say buy. It still says yes on this, sell on the screen. So I'm not going to buy anything if it says sell. So I'm not interested at all. So the previous ones right there that worked out kind of, again, you see, it gives you the example. You always have to pay attention. Where are you betting? You betting on something that has took this kind of a hit. Okay. And then it gives you the buy signal here. But don't expect this. That's very, very high expectations. Stock takes time. Zigzag patterns are different because you already have quite a bit of accumulation. You have a three-way pattern in the entry. You picks up an entry here, and then you you're making a bet for the price to go right back up. So those are much easier because it has a well-established trend, price chopping around sideways. You picked yourself another entry, boom, you ride the thing back up. So those are so, but at the same time, when you're buying something that is taking such a massive hit, it's gonna give you a lot of whipsaws. I see a lot of signals as well. I don't jump on all of them. I take a good look at them, say like, okay, well, want to see what I'm buying. What would be the expected time I could think? I can clearly see stock took such a massive beating. It's gonna take some time. Then I'm gonna look at the ATRs and stuff and see what the what the average expected move is. These are the things you just gotta have to factor it in to say like, okay, yeah, let's take this one. I can just sit and just play around with all these all these stock doesn't mean it's gonna risk left and right. Like this stock right there, what's that called? Dual DU. I don't even know what company is this. So this one right there, you see like how big of a beating the stock has took a lot. So sooner or later, something is gonna trigger here. Doesn't mean that it's gonna go like, well, that's what we all want when we are in a trade, but it's gonna take time. These are a bit of like they're called like choppy trade to start off. They kind of give you a bounce, bit of a hope, give you another flush down to the down. It's just gonna stop everybody out. Like these kind of the bottom just instantly form. Good bottoms are the ones that are formed in a pin bar. Okay, those are good bottoms. Like if you had a huge pin bar, like something like this, you see, very little body, but you have a massive pin. Okay, these are the ones that are pretty good highs and lows. Okay, with that comes like either straight down or straight up. Like these kind of a dead beat kind of price action, you see, for days and weeks, it just kind of like chopping around sideways, and then it started slowly starting to give back. So these are the ones the it takes time because stock has gained so much. It's not gonna instantly give everything back. That's what it takes is time. So we all talk about this all the time. Just remember this picture. There's a lot of stuff back here is all based on this picture as well. Accumulation phase, distribution phase. In this case, well, because this triggered here would have been like this if the upside trend would continue, but it went south. So these are the examples that you can see, but that doesn't mean that, like, look at this. Elf Beauty. I don't even know what they're doing, but look at this. Calling a low. Look at the low here. Signal fired here on 422, somewhere around like $52, $53 on this stock. It went all the way to 128. Now you have to question yourself. Do you have enough patience to hold the trade for that long? First, you don't even know if the trade is going to go that far. First thing. Second thing is this: would you be able to handle days where you're going to have, well, this one really had any down. This one has a bit of a swing down here. Just, yeah, what company is this? Elf Beauty? Wow. It just, yeah, I mean, are we gonna catch these trades? Of course we will. Just wait. 100%. We're gonna ride several of these ones. Just stay in a trade. Don't even look at them. Let this thing work. Same thing here. Look at this. Amcor Group. I'm just looking at S&P 400 list here on the watch list. So if you these are all the examples. Like you see, like now this one's a close call. You see, it triggers here, and kind of you still get the downside until here. But look from here, still going. But the point is like here is just like you see, like you push, you give everything back, and then it slowly takes days. You have to count them like 1, 2, 3, 4, 5. That's 5. That's 1 week right here, straight down. You'll be like doubting yourself, like I got in somewhere around here against this, and I'm just, well, this is where you tell the market is going to test your nerves. I mean, if you would ask me, I think this is an excellent risk to reward trades and gives you a well-defined stop loss. Signal plays out, good. If it doesn't, move on to the next one. It doesn't mean there's not going to be another one. I'm always on a hunt. There's always firing up left and right. It's just a matter of how many I want to play, how much I want to risk per trade. Those are the only two decisions I have to make. If I take 15 or 20 signals a month, 15 a month, I just want to see what my average is, because some of them, they might not show you the result as much at the same month. You're probably like thinking like, okay, well, it is a valid signal. I haven't got that much of an upside because I picked the entry or whatever. But it's just a matter of like which stock is going to move how fast. Well, we're gonna find out. There's no way knowing that. There's gonna be a stock that you see is straight down for 4 days. So you just like ask, like you're looking at the screen, like, okay, what should I do? Should I cut it? Should I hold? Since I entered the trade, I'm taking a beating for 4 straight days. But look where you're buying. You have to look at this way as well. This stuff, these are the bottom trades takes time, but they give you an excellent entry. Look at this, 350 to 570. Imagine this. Still going. How much money you can make. Tesla is good. This is what I do all day. Oh, Eli Lilly, see, I'm not interested. I don't want to open a trade. Doesn't even say buy. Why would I buy something? Like these are the trades like IBM has a sell signal on it. 291 against 295 stops. I mean, can you enter a trade here? Sure, you can if you want to short it, but then you just gotta have to use the stop loss. But the point is like, yeah, this day entry and entry here is gonna be the same way, same thing as you can see, because the price is literally almost hasn't really. It made a really small push to the downside. You see the size of these candles are pretty small, and now yesterday got a bit of a pop right back to the ATR line right there. That's the average true range. So we're right back there. So right now it has, well, should I buy IBM? Absolutely not. It says sell here. I'll just wait when it's gonna come by. Then I'll interested say like, okay, I'll buy something. Now if I say like, well, I want to short this stock, okay, well, take an entry. What's your target? This. What is it? For 265. That will be my target for this trade. You're just targeting the next fib. It's all here on one screen. That's your target. Now, how you want to buy and how you want to adjust your trade, like, okay, should I open a 285, 270 call put spread? Could I make a spread down here? Should I just buy a put here? Like these are the decisions you have to make, like how much of a risk that you want to take is to see if you can get this slide all the way down to 265 against 295. So you have 285, 295, you're taking a 10-point risk. So you have to look at your risk to reward ratio as well. So you're looking at 285 against 295, your reward is 265. So these are the, these are the trades. Like here's Meta. See, it's been under pressure. Look how close it got. Look at the high of this bar. So it triggered here on a 7-3 4 7 8 9. Look at the high there, but it didn't break above this previous this high. That's where the risk was defined. And now from here, we're down to 700. It got a bounce right there from this 15. Yesterday was a nice close though. You see it has a hammer candle at the close. This is a bullish candle. Volume was good as well. But that doesn't mean I'm gonna, yeah, I tried taking a shot on a 1 hour time frame. I was screw it. I don't want to I'll get it. I'll get it. But I'm not, if I want to swing a short term, fine. But based on something that I want to take a little bit of a decent sized trade, no, I wouldn't even touch it. I don't want it. Look at Netflix. Sell signal triggered here on 7/3. Triggered on this bar. Triggered on a 7/3. So you're looking at somewhere around like 1300-ish kind of price. Okay. And this day right there against this high of 1341. No, it's actually the lower, it has a lower 1338 to this high. Because the all-time high is 1341. So this is the stop loss you take in on this day. That's the one. That's pretty wide, I know, because not as wide because this is a 3. It's a 5-point spread right there on the price scale. There you go. Now we're down to what? See the yellow line right there? That's your target from a sell, the yellow line. I didn't take the trade. Don't get me wrong. I'm just giving you an example. Again, Netflix is a damn expensive stock. You know, I mean, $1,200 stock. Like how many contracts you can trade. So is it played out right in front of you? It works. It's not going to disappoint you. I can tell you that. Trust the system. Let the system work. We're not blindly buying, the CRM right now. I've been watching this one. Look at this CRM, what this stock is doing. Literally sideways, like just this stock has been sideways since 5/29, May 29th low. Just not doing anything. Goldman Sachs, sell signal. But you see, it's not giving up. Why? Because look at the upside. So you always have to pay attention, like where you're gonna short the stock. It's not gonna these are a little bit tricky as well. But again, if they're gonna play, well, same. We just took an example of Netflix. Netflix had a massive upside, right? We all know. But did it manage to get down to the target exactly based off this? Yes, it did. That's the target to the downside. And same thing here on a GS. Look what the price is doing. These big heavy names, they actually have I mean, if they're gonna make a big move either to the downside or to the upside. So if this sell signal will trigger up on a very top, it's gonna be very little choppy for several days, We just have to watch the high and see if the high didn't get taken out, which is right here. So this trade right there is you have to pay attention. Like basically, you don't have to do anything. I know what to look for. I know how it works, what to take, what not to take. I mean, just 723 against whatever. I mean, price is literally where it was the day since 7/9. It's just really been sideways because it had a massive run. Amazon got a sell signal yesterday. I think it was gonna get invalidated. Actually, it did. So it's a false signal. See, price has already went up. So it's gonna disappear on Monday at the open. When the price is gonna poke above and make a new high right here, this will stays there until the next day. When the new bar will open, the sell signal will disappear. So it means that the previous buy signal, which is coming from the bottom, from here, is still going. So you just have to wait for the next one to appear the next time. Okay, so this one is still going. So this one will update on Monday now. Yeah, watching this one, QCOM, we just talked about this. See, it has a sell signal. So I'm not interested in taking a trade, but I'm going to track that wave count, and see if we can get the 8 swings. It's the same thing that we counted here. I can just look at the screen itself right here. 1, 2, 3, 4, 5. So it's the same thing I did there. I don't know if this is some sort of an ABC down here, which we're gonna find out, but you need one of these to pop, and then I'll enter the trade. In the meantime, we'll wait. I will never open a risk here if it says this. You know, it's just like if we jump on this trade on Monday, let's say. So what are we gonna use here? Let's say on this low, when you're fighting this, then we're gonna just enter a trade here and use this low. What you know, because right now the ideal target for this trade is 148, this yellow line. That will be the ideal target if it still stays in place. If it comes here, retested, bounce, whatever, but that's all relevant. That's who cares. When we're gonna see a green label, that's when I'm gonna take a shot. That's what I'm gonna swing. Until then, who cares where QCOM goes? You know, so like this is Google. Look where the Google high was yesterday. JPM, same thing as Goldman Sachs. All these, that's what I'm saying. It's just like, look at these names. These are the ones that are the most. We're looking at the S&P 100 index right now, all of us. Like, look where these what they are showing right now and what market is actually doing. This one is against 296. Just like a Goldman Sachs, same run. You know, it's a typical same, it's a identical same chart as well. It's just been sideways. Apple, we already looked. This is some Duke Energy. Who cares? Wells Fargo, sell. See? Financials is just horrible. Financial right now at the moment because it has such a huge run. Here, bank, what is that? Bank New York Mellon? Jeez. Still going. I don't know the story on this list. It's a very low ATR play. NextEra Energy. There's an S&P 100 stock. There's Johnson Johnson to the John Deere. Look, how's it giving back? Look at the upside. This one, this, another, you know, it's just look at this high against this high. And we just don't know. Now, if I make a sideway case for it just to say like, well, I want to use this, look, I mean, technically, what is so bearish about this stock? First of all, nothing. It's just a sideway chop back and forth. There's nothing bearish about this stock. Starbucks, sell, low, sell. Look how much dip it took. Sell, that's your target right there. Some of them, HD, same thing. It's all on one screen. It's barely missed it by a penny. Pretty darn close. CD is still going. All the way to 93. PayPal, sell. Intel got a sell recently. This week. Bank of America, sell. Capital One, sell. Like these stocks are just like taking a pause now at the very top. They're not really pushing. This one got one, SPG, yesterday. There you go. That's a fresh one. It has a sound before. Too close. It's gonna reset, so that would be the invalidation mark. That is sideways, pretty very choppy. Oh, Simon property. See, it's just so range bound. This price action, man, is painful to trade, especially with options. When the price goes sideways, oh man, this one is, jeez, this one is actually breaking a pivot zone as well. Wow. This one invalidated yesterday. This is not good. MDT, Medtronic, has a higher monthly bar as well. Yeah, Amsterdam stock is trading above 2150 and 200 EMA as well. So definitely bullish. Now you have to factor all these things. So it's just showing you some big names. There's Walmart. So what is the other one? Look at this. I don't what company is this? Every day I look at this company. Every single day. Where is this stock going? Emerson Electric Company? What did they do? Can basically break the pivot as well.
It's all the AI trade. You can also look up APH. The chart looks the exact same.
Oh yeah, this one actually a fall signal right there, you see? Wow. Yeah, you got the upside from here. You got a big flush down. Then ever since, nothing fired. It's been rallying ever since. Yeah, you got the pivot breakout here from this high. There's some names are definitely gonna pop. I mean, we'll definitely I'm gonna take a shot at them for sure. ACN puking nonstop. Basically back to the yellow line from here. Came back, we made a new low. It just inside month. Yeah, it's trading below 2150 and 200 as well. So nothing there. This is a very interesting one. Craft. You see? Same thing. You see, massive downside. Got a bit of a pop, full fade all the way down here. Look how close it was. You know? Look at the low of this bar against this low. So this stock has, if this is right, it's been bottom. Why is this? Look, it has a daily and weekly. There you go. At the same time. This is very rare to match two time frame with the same buy signal. Very rare. I know, I know that. This is you don't get to see this daily and weekly buy signal triggers pretty much at the same time because they're two different time zone, the time frame. They have a different highs and different lows based on the time, based on a daily and a weekly highs. Daily is calculating daily highs and the daily lows. weekly is calculating the weekly high and the weekly lows, right? So they're two different charts. So you have 5 days of a daily bars has to make one full week of a one weekly candle, right? So it's very, I know it's very difficult to match them side by side, but you do come across, I mean, they're very strong buy signals when it triggers, but you're not gonna see them that often. It's like a once in a blue moon. Got a mean divergent signal here on this Philip Morris cigarette company, I think. Palantir is still going. Nike sell now after this buy. That was a nice lotto. Gilead sell. Healthcare is a disaster, man. Nvidia still going. Adobe waiting for this one. I like this one. I'm just waiting for some buy signal to trigger. I think it will in the next couple days or so. I'm tracking this wave count as well. So such a great company, man. I just fucking hate this. This CEO is an idiot. Here. Just waiting for to see if I think it's gonna cover into 199. That's the time frame I always use. You see, you got 1, 2, 3, 4 truncation in fifth, got a massive gap down. Barely missed it by less than a point. It's common. 2, 3, 2 versus 1, 61.8. Y versus W, 61.8. And then you have Y versus X, oops, 61.8. So there's a lot going on around this 365 mark on this stock. So let's see what happens. So I bought two leaps, long dated one. I'm gonna just hang on to those. As soon as the buy signal is gonna trigger, I'm gonna add 2 more. So sometimes I end up picking a little better entry than the signal actually fires. It happens, but not as much. But um, what did I do? So indicator line, I want. Well, where's my line? So we're gonna change this to indicator. Okay, I gotta change this. See, I forgot a lot of things. There we go. July 17th. I'm looking at this to this. So let's see what happens. These two is their price and time relationship. So it's a weak stock, so we just don't expect a massive upside either. It's gonna take time. Your stock is down 14.89 against 26.94. So yeah, 5 waves up, 3 down, channel. We'll see if it gets a breakout from here. That'd be nice. Again, we're gonna see if we can target 78.6 to take out this high, which is 421. Then we'll get to 440, 465. Then we'll measure more upside. But for now, it's just gonna wait and see if needs to find a floor. Just first needs to get out of this channel. Need to break this channel first to get yeah, got work to do. We'll see. BM is very choppy. I've been looking at this one last couple days. Oh my God. Ugh. Bristol Meyer, Coke, choppy. Visa, mean reversion sell. Disney got to buy again. Right there. Yesterday. So it's actually right there at the holding the pivot zone. That was the breakout here. Look at the low. That's the breakout here for the pivot. Pivots are a really good way to trade the market. I don't know if you guys even know how to do it. 20 bars is the ideal time for daily time frame that fires. You can pivot zones. You can do 10, but if you want to go to a smaller time frame, but there with those ones, you're gonna get more false reading and you get it builds a 10 bar, 20 bar pivots. Gee, look at this Microsoft, man. Crazy how the stock went up. Wow. Boeing is up, FedEx sell, BlackRock is a buy, reverses right back up to the pivot. Honey got a sell, trying to reverse back up. Honey had a pretty wild run as well. So it's down to 236 now against 241. Every sell too choppy. Look how back and forth. The healthcare is just look at the pop and Pepsi on earnings. Huge. Yeah, Pepsi is gonna hang this area. Yeah, it's gonna take some time. Right there. You see, you got the 3 breakout here for the pivot because that's the pivot zone. So you break, you see it. I mean, it can do this as well. So yeah, the run for this month is done. It's above 21 and 50 now, still below 200. 200 sitting at 146. So that's going to be the big hurdle. 1 to clear the 146. Union Pacific, we already looked at them. This one got a mean reversion. It's expensive stock. Against 742. It's almost there. It's not a cheap stock. Microsoft, we looking. I want this one. Costco. Costco RRG looks so good. But I'm watching. Looking at it yesterday as well. I was like, I was watching to see if something triggered on the daily bar, but nothing yet. Broadcom. That kind of trade is working really good. McDonald's. I took a shot at that one, but we took a trade. We took a trade. So just waiting for earnings. That's it. Yeah, we closed that one. This stock, Microsoft, Nvidia, and Oracle. Larry Ellison is the second richest man in the world now. Do you know that? After Musk. Yeah, he worth more than Jeff Bezos and um, Warren Buffett and yeah. Yeah, his net worth his net worth now is like 230 billion because of this. Yeah, he was the one a couple months ago at the White House kissing the ring. AMD on a run. Amgen is okay. Wait for earnings. Energy took a big flush yesterday. All the way down here. Energy is a tough one to fight. Caterpillar. Element is a very choppy stock. This is going to zero. United Healthcare. MMM. Look at the earning reversal from this high. Man. 164.17 and the high was 164.15. Took me years to learn these fibs. American Express sell. Thermo Fisher sell. Netflix sell. That's it. It's very we can do index. Here's look at this. Dollar. Dollar is moving. Okay. Dollar doesn't give you because not a tradable index. But he's used the same low. So dollar is S&P. From here. Look at it. Month is up. Week was up. Day was up. 21 EMA, 50 EMA, 200 EMA. What the hell is bearish about this market? And people dying to pick tops? I don't get it. Look right here. I thought about buying Porcello. Trust me, I'm scalping them on a 1 hour time frame just to catch like a 1 or 2 points. There's nothing bearish about the market. Look at that. Everything is green. So right now it's at 62.96. So the first test would be at least, let's say, 21 EMA. We're just sitting at 61.94. That's 100 points for a test of a 21. So what are we fighting right now from the top? 100 points? Yeah, if you catch a full 100 points, of course, the payout is massive. SPY. I mean, these are pivot breakouts. I know, man. I have one of the most hated, like 21 EMS 617. So whatever time that you wanted to buy, that's your minimum downside target would be 617 if the price, whenever it comes back down to retest this, that would be a first target price. Let's say call like 620. 620 strike to see if the price is going to start pressing down toward the 620 mark. Yeah, there's a pretty good chance that it can push down to test the 21. I mean, that would be a solid trade for sure. But the screen doesn't say sell. Why would it? I mean, it's hard to for me to put anything on the board. I'll I'll swing 1 hour quick ones. Just to use a 1 hourly bar as a stop loss. Either it goes, if it don't, that's fine. I'll swing those ones very short term, but here, come on. Oh, cues. So that means I watch all this every day. Man, it's raining hard outside. Oh, hang on for a second. I think you went. Hang on a second. Okay. Okay. Yeah, SMH. I mean, it's just TLT. Yeah, I just gotta wait for earnings. That's it. That's the earning driven market from here for the next 2 weeks. What do we have? What are the big ones? Okay, Domino's. Nothing here. Lucky Coke, Philip Morris. Nothing really big here. Yeah, okay. Texas Instrument will watch. ISRG will watch. Yes, this company is Thermo Fisher. You see, this stuff got destroyed. IBM, there you go. It has a sell signal on it, so that would be the earning bet. ServiceNow. There's some action here on Wednesday after Tesla, Google, now IBM, Chipotle. So that's where the action is. Wednesday after the close. Then we got American, Southwest as your honey bunny, Deck, Newmont, Intel. Charter. Yeah, see, it's just, I mean, there's few names kind of split them around and stuff, but the main, but these are the Wednesday after the close. So we'll see. I might play something. Google, I mean, already have shares, already have Leap working. I don't know. I thinking about might take one Leap off. I hate to give anything reverses, just hate to give it back. I'm well over, like 3,700 bucks or so on this trade right now. Google is working really good for me. So we'll see. On Monday, I'll see if I can take one off or something. Signal looks good, but the earning is just, man, anything can happen. I like the stock. The wave count looks really good. Looks very good. But again, if it goes our way, yeah, of course, the reward is definitely there. But it has to pass this you got flat here, look, diagonal, 3 waves down, bottom here, got the push here, 3 wave down here, picked more leaps on that mean reversion signal. What the zigzag pattern was, it's a complex here. And now we're making our way up. So we already cleared this, which is a really good sign. Google is really good, really good. Now the thing is this, what do we do here is 1, 2, 3, 3 versus 1. 3 versus 1 using this low 162. Hang on a second. See this. So 162. And I was too far down now. $172. Sine wave count. So I need this 172. We're making a higher high. So 3 versus 1, 193. 3 versus 1, 207, which is 161.8. That would be the ideal. Now the tricky part is this damn 78.6. Ay. This one. This is going to be a sticky zone right there for Google to clear. So watch this one. This. You see, you have a 78.6 from peak to trough, 100% off from this low. If it clears, then we'll have a pretty good chance for this 3 versus 1 for, that all depends on earnings though. So it all depends on earnings. Worst case is we could do, I mean, the alternate path, I would say, if the price fails, but we have to extend this diagonal. 1, 2, 3, 4, 5. Okay. So we have to go this route. I'm gonna put it 1, 2, 3. I don't want to change the chart. I'll just show you like this. So this would be a 1 diagonal, and then this will be the push back into. Okay. So this will be the path for a 1-2 count. If this 1-2 goes from here the way it sits and the signal holds, we'll just see if we can write this thing up. If we get the earnings surprise, all I have, then we just have to go this path. Okay. So just keep that thing in mind. I'm a 100% buyer on any dip. This is the stock that you want to buy on every dip. This is the most profitable company in the world. Okay. I don't know if you know that or not. This is a cash machine. Own the stock. They make crazy money. It is the cheapest. It is one of the, it is the in a Mag 7, it is the most cheapest stock. This stock should be trading somewhere around here. That will be the fair, I mean, it's not up to me to decide. This will be a fair price for this stock to trade right here. This 240, 250 price to earnings. Right in this area. This stock is cheap. God, I hate the word. I hate using a word cheap, but it's like roughly give or take like 30 to 35% upside. So, it's a very cheap stock. I mean, it was much better down here. Now it's time to move up. So that's the plan for the Google ride. Okay. So we'll see. We're gonna watch earnings and see how it plays out. But well, finger crossed, hope it holds. We can get to the 193, 200. I mean, month is up. Week is over now. Month is up. 21 is 178. 50 is 173. 200 is 170. Okay. So this invalidation is 2 points shy of 200 EMA. 200 EMA sitting right here, 170, right around here. So, yeah, I mean, we'll see what happens. Yeah, you can watch. What is that? 185, 170, and 173, 170. So I see 173 and 170. This 3 point window is going to be a pretty thick floor. 173, 173, 170. What are the action moves? 70. Yeah, that's exactly what I just moved that thing. With the invalidation right at the low of wave 2. This area right there is going to be a solid floor. If that's the case, I mean, well, then if earnings will surprise, that means if we make a case here like this, then it means that this wave 2 right there is to go below the 200 again, because this is the prior fourth wave. That is always going to be a minimum downside target, bare minimum, prior wave 4. That would be, I don't know, Google is going to give back. Plus, it has a higher monthly bar, which is a good sign. It should be okay. Stay positive. Um, what else we have? Chipotle. Oh man, this thing is so last trade, remember? Man, it was so painful to trade the stock. No, man. Yeah, 50. Okay. What I was gonna do sectors like healthcare. It's crazy. Like, how is this like look at healthcare. It's like literally refuses to go to the leading quadrant. Watch the green line has a movement each day. It will go all the way back. It can go back here. Like, okay, 4-9. Look what this healthcare is doing, man, these stocks. Look at it. This is what you want right there. There. This. Look at that. It's like it refused to go into this green, the leading quadrant. It's crazy. I don't know. They just they look with technology. It just refused to even go in there. Look, it came back up April. Back down. Reverses back up. See? It just doesn't want to go toward the lagging quadrant. This is where the swing is going to change. I know that. As soon as this thing will push toward the lagging quadrant like this, well, okay, you want to see this one? Oops. This is where the Meta and Google is. Communication, like you see, it's not given. The swing is up. Watch, two down, up, two down, up, two down, up. You see, it's not given three down bars. Huh. You see that? You need three bars to turn the swing down. You see, 1, 2. No, third one. Up doesn't count. 1, 2, up. 1, 2, up. See, you're not getting three. And see, this is, so you have a very weak weakness. Let's run some scan, then we're done. NASDAQ 100 low, buy signal, sell signal. Oh, oh boy, 85 stocks. These are different. These are not the one screen that you're looking for. Bullet setups. Let's do a weekly scan. 38 stocks in S&P 500 for the next week. Into the week. this weekly, this. So these are your green boxes are your bullish setups for the weekly for the next week. So check and see if which ones are up and which ones are down. Okay. So these are the ones that swings are already down, but they're not based on a candlestick pattern. They're showing a bullish move for next week. Okay. Airbnb. So we're not worried about this. We just focus on this. So what we're looking for, you need to take this high to this high, sitting right there. So next week, Airbnb 143 to 143 to 148. If this bullish setup holds like the previous one. So that's another way you can find trades. This is the candle match, creates bullish setups. They're different. See, I've several ways I can take a trade. This is one of them. You see, he's trying to break this high right there. I don't even know what stock is this. This is a bullish setup right there. So these are the stocks that has, well, these ones already have swings up. So PH awful, geez. Oracle is another one. NTAP. Your first target is always the high of the of this week, 110. Kim has GNRC. All these stocks closed green yesterday. Whoa. This stock is dying to push. AMT, Broadcom, there you go. You can see how the previous pattern plays out as well. You see it's the same scan that appeared here that day on that week. The next week was the inside week, and then the week after that, it took out the it took the high. So basically, right now your target is 288.28. So you're looking for the next week to have a higher weekly bar for this pattern to play out. This one, you see, higher weekly bar. Signal fired here, higher weekly bar. So you targeting the high of the previous week. AM, this one. City has a very strong close. Wow. CCI right there. Crown Castle. So we're dealing with these two swings. We can do this. There you go. This is a price retracement. It mirrors the upside. So basically you take the swing high and low, it builds a zone for you and it gives you the target. It's a perfect way to trade. It's so easy to trade this way. You just take one measured swing, take the high and low, build a zone, pick an entry, and if you're bullish, you're going up, you bearish, you're looking down. That's it. There is no other easy way you can trade. Just play one swing in either direction. Obviously the direction of the trend. It's the same thing I did here. It's there. That's the low, that's the high. You take one swing, build a zone, yellow zone, target the green zone. Another swing, build the yellow zone, target the green zone. Another swing up, yellow zone, green zone. Swing up, yellow zone. Now is this. It just keep repeating from yellow to green, yellow to green. So you just, this is just my 11-year-old can do it. Just like you just take one measured swing. There's a lot of ways to get the upside, but we don't know. It's all probability game. You don't know how much the price is going to go up. But Fibs does a lot of work, especially when you're trading price. Like this, who cares what happens here? All you focus on this on this weekly swing. Take this high, this low. That's it. This is your zone. This is the breakout. This is the target zone. Yellow to green. I wanna I have I can make things so like I can do some heavy technical work, but there's no point for it. I just don't see it. A lot of people just don't know what's the point. So you want to do this, take let's say expansion. So you can take expansion here. So you can just play two measured moves. That's one target. You can do an extension. You can do extension from here. You see, they're all gonna be different fit. It's all a matter of like where you run them. What high and low do you pick on which time frame? That's the key though. When I start learning about trading and the whole thing, I used to sit and watch prices for hours. Just sit and watch. Not no trading, nothing. And I start marking these highs and lows of every day, every week, and every month. And I'm like always like have that thing like, okay, well, if the price breaks, where does it go? And how far does it go? You know, the Fibonacci's are all around before I even born. But it's just like I just watch prices like different charts. I just mark, just grab the thing, just mark the high and low, just like this. Just manual, take the high and low. So then I was just like, I'm doing a swing here, but that time I was just like mark this high and this low because this is a weekly. So this week is done. So now I was like, okay, well, the next week comes into play. That's the weekly candle. So if this price breaks, how far does the price go? And what is normally how far the price can go? You know? So you just take those minimum like the targets just to see, okay, well, if we do the run, let me show you let's say you took this week because this is the week just ended. So you took this week. See? Came right at 145. Then I just push it back up. This is what I used to watch. Well, I don't know where the price will bounce for sure, but like then you have those ATRs that you watch to see what the expected move is and things like this. What else would I scan on? Any go signal? You can do an S&P. Wow, man, this Airbnb looking kind of good for next week. It has the pattern, has a go signal as well. Autodesk, Datadog. These are all weekly go signal triggered this week. Expedia. These are 500 stocks. Keep that thing in mind. Expedia, ED, DLR, Datadog. Okay. Anything daily for Monday? Tesla, I know. Skywork, Edward, Clorox. That's a bleach. I have the trade open working. I'm gonna get my freaking money back. Okay. This trade is going good. We need to break this 131.26 to get to 135. Yeah, it's playing out. It's playing. Yeah, we took the signal trade and the very first trade didn't play out. So I'm getting the money back. That's what I do. I do it all the time. If I enter a trade here, right? And if I have upside, and if I'm gonna get stopped, I'm gonna take a loss. And I'm gonna be watching the stock, especially the 100 stock. Then it's gonna stay down, down, down. Whenever the next one is gonna trigger, I'm gonna buy the same stock back again. So whatever the money that I lost before, I'm gonna get my money back. You have a very less chance that once the signal fail, that the next one will fail after that as well. First can fail. I don't know if you understand what I'm saying. What I mean by that is, let's say we have a better example. Let's say you have a buy signal triggers here, right? Which you can see it right there. So you enter a trade, 2 days up, chopped around, and then you got a sell signal here. Oh, look at this, first of all. So now you have a sell signal. So you either get out of the trade here, even whatever, a few bucks or whatever, a couple points. You get out of the trade. And then this trade, basically, you actually get up because this triggered here, not on this day. It triggered on the 27th. So whatever the difference here for 2-3 points. And so this buy signal failed, right? So you had a sell signal, you had a buy signal. So what happens is that once this fails, so it means that this sell signal, the very last one, still stays in place, meaning that this is still going because this one failed. This disappeared the next day. So now you still have the sell signal. So then after that, when you're going to get another buy signal after a failed one, the chances for failing that one is very, very slim. Okay? So keep that thing in mind. So what I do is this. Like, what's that? Like this trade, right? I'm going to leave this line here as is. So this one had a buy signal here. Now this trade got stopped out, right? Because of this low. And I got a bit of a power. It's still kind of sideways, range bound, right? So this sell signal is not going to disappear or fail until the price goes all the way back up and takes out this high. It needs to make that higher high. Okay. Then this sell signal will fail. The next one is going to be another buy. It's not going to be another sell. It's going to be another buy. That buy signal, the next time, I'm going to enter the trade again using the same stop loss like this on the previous bar. Then the money that I lost, I'm going to get the money back. I do it all the time. Okay, you wanna take, if it fail, fine, I agree. But the next one is gonna be a buy. I know that. I'm gonna take another shot. So it's the same thing that I'm doing here on CLX. I opened the first trade, didn't play out, right? So then I open another trade based off this one. Now it's working. So I understand that I took a loss on the first trade. Now I'm getting the same loss back from this, and I still need to work a bit more to play it out. But that's just basically that you lost on one and you're trying to just take in a revenge trade back. You're trying to get your money back. So it's like I act because it has the buy signal. I wouldn't randomly buy it, but the one didn't work out. Okay, well, next one is gone. Next one will. It will. If I can even, let's say, recover 50% of the loss that I took on the first trade, I'm still in a better shape. Don't you think so? Whatever I lose, I lost $1,000, let's say. Okay. So if you buy the next trade and you recover 50% on the same trade that you lost 1,000 and you recover 500, you're still going to be down 500, right? But you recovered 500 back. You think $500 better or $1,000 better? But it's the same stock. So it's just because that time the signal failed and it was somewhere around here, took a huge beating down. And now we'll see what happens. We'll see if we can break this thing up, and that would be good. And because there's not going to be another buy on S&P. It's going to be a sell on one of the daily bar, not on the Monday bar. If Monday, whatever, it will appear on Tuesday, whatever. I don't know if it's going to appear or not, but it's going to appear the next day. So when is that thing is going to trigger? Well, I don't know that. We're just going to watch every single day. That's what I do every single day. I'm watching. Okay, these ones right here, same thing. These ones doesn't draw a line because index, you cannot do a SPY for you. SPY will show you those the lines right there, like these ones. So it's going to be a sell at one of these daily bars. So we'll wait and see, and then we'll act. IWM, see. Okay. So,